New details on the president's tariff plans. Let's get to Eamon Javers. Morning, Eamon.
Yeah, Carl, that's right. The president, speaking to Newsmax yesterday, said in terms of the April 2nd tariffs next week, he's inclined to be more lenient than reciprocal, because if he is too reciprocal, then that could be too tough on people. So I talked to a White House official this morning to figure out what exactly that means, more lenient than reciprocal. And what I'm told here at the White House today, Carl, is that what the president is signaling here is that he is not going to take into account all the non-tariff barriers that countries raise against the United States. Remember, early on in this debate, the White House said that they would include things like a VAT tax, wage suppression, currency manipulation, those kinds of things in their calculation of a tariff attack on the United States, and therefore that would be part of the reciprocal tariff back. Now what I'm told is that they're signaling they may not go all the way to including all of those non-tariff barriers in determining what the reciprocal tariff rate should be country by country. How are they going to decide that? I'm told it's more or less going to be on a case-by-case basis, but what they're signaling is that a lot of the stuff they said they would calculate against, they may not actually calculate against. So it is a sort of lessening of the severity of the potential tariffs that we're talking about based on what they had said before. Now, there were a lot of critics who said, as our Megan Casella points out, that some of these non-tariff barriers should never have been included in a discussion of tariffs. Nonetheless, the White House signaling today they might not go all the way in including some of those non-tariff barriers next week. Guys, back over to you.
At the same time, Eamon, we do have, in this week, for example, the introduction of these new secondary tariffs, particularly vis-a-vis Venezuela, and the copper, for example. Some headlines today suggesting that those might be moved up a matter of weeks, not months. Copper is on the move today.
Yeah, that Venezuela one is important, Carl, and I think the market needs to digest the implications of that. I asked the president about that on Monday. He told me that when he's talking about secondary tariffs on Venezuela, that's an additional 25% of tariff on any country that does business with Venezuela. That includes China. The president told me that that 25% tariff will be on top of the already in place 20% tariffs, to imply a 45% tariff on China next week unless China stops buying Venezuelan oil between now and then. So that is an enormous thing for global markets and for global trade. We'll see whether it comes to pass, but the White House is saying they envision a 45% tariff on China next week unless something changes with Venezuela and with the oil market.
I feel like there's going to be a lot of diverting of oil. I mean, Venezuela, like they can get around that probably. They have other sources of oil.
Yeah, there's a lot of shell game you can play, right?
So, but Eamon, on this news that you're talking about, the non-tariff barriers not being included, so that could be a really big deal, especially for Europe, because you mentioned the VAT tax, also the Digital Services and Markets Act, which he has referenced as a non-tariff barrier where they punish our big cap tech companies, that sort of. I mean, it feels like that would be good news for Europe if it comes to pass.
Yeah, and I'm just going to read you a list here. This is from our Megan Casella, who points out that a number of things that they listed early on in this debate as non-tariff barriers include taxes, including the VAT, non-tariff measures, including subsidies, burdensome regulatory requirements, exchange rates, devalued currencies. They told me that also included in that calculation is wage suppression in a given country. Those are things that they had been signaling early on that they would take into account. And now they're signaling they'll no longer take into account, or maybe not 100% into account. Where that lands is a totally open question as of right now. So I don't think you can take any of this to the bank, but you're just, in terms of measuring the needle on where tariffs are going, this is signaling we're not going to quite go all the way to the limit of what we said we might do earlier in the year.